Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta, and we're talking about the energy prices today, where we have seen further decline. So, good news about the consumer countries, yes, but the choppiness, the kind of volatility that we have continued to see in the space, isn't really such a great idea. So, take a look at the crude oil prices, where we are trading with a negative, and the natural gas has actually given even bigger decline. We are trading down by nearly 10% as the new week has started, and we did see nearly 8 to 9% of gains on Friday. So all of that clearly seems to be have washed away. So if you look at the year 2023 until now for natural gas, we've seen a high of around $3.6 per MMBTU. That is how this year began. By the month of Feb, we saw the prices decline to 1.7, and we saw prices go to $3 in the previous week. Currently, we are trading at 2.6, so it has been very volatile. But when you look at the year until now, we're down by anywhere between 30 to 40%, depending on natural gas prices, on where in the world are you watching it, because it has been a sharp decline in Europe, in Asia, in US as well. So when you look at the numbers itself, we did see prices gain to a 5 week highs on Friday, and we have seen them slipping from those kind of highs right now. The Asian LNG prices are the lowest since July 2021 and down about 48% in this year until now. The US gas prices also have seen a very constant decline. The European gas prices are at the lowest level since August 2021. So whichever way you see, we've seen the prices come off from its highs. The output in US also is expected to increase in the month of March. Feb was at around 98.4, and we're looking at numbers higher than that. But this is much lower than an all-time high that we saw in the month of November at 99.9 billion cubic feet per day. So yes, the production has declined, the prices have gained up, inventory is huge, and demand, as and when it comes, does keep the markets very volatile. That's about the gas, where we seem to be finding some footing at around $3 per MMBTU. But the crude oil prices also have continued to decline. So, over the weekend, there was this report that UAE perhaps could be leaving OPEC and wanting to produce higher than the quota that has been allotted to them. But as of now, we understand that the UAE has said a negative to that. So that premium was taken off the prices. Apart from that, the major mover during the day clearly has been the strengthened dollar index, which is back at around 104.5 to 105. It has been trading within that range. And the second thing is, all eyes were on the China National Congress Party, where they have set out an agenda for the next 5 years between 2026 to 2030. And while the street was anticipating that the growth number could be at around 6% or 5.5% at least, what we are given to deal with is 5%, and that is what has led the markets down. Remember, this week is very, very data heavy. Today we have the China inflation numbers. It also is about the factory data that comes in from US. Tomorrow and day after, the US Fed Jerome Powell has testimonies. So Tuesday and Wednesday will hinge on to what he says. And then in this week, you also have monetary policy meetings from Australia and Canada. Markets also very keenly will watch out for the US non-farm payroll data that comes in on Friday. So get ready for another very volatile and choppy week, with the markets anticipating that we will be trading volatile but within a range. Do not expect to see further higher highs, at least in energy as a sector.